I'm here with Craig Bannister, Executive Director of Pallas Capital. Craig, welcome to the Inside Network's Income and Defensive Assets Symposium.
Thank you, and great to be here with you.
We've seen the private credit space evolve considerably over the last decade or two. What do you see as the major trends over this time?
It's interesting that this private credit space has certainly grown. 2016, we started the business, and in that space, this 8 years since then, we've really seen private credit grow. Private credit as a term is so generic now. Which part of private credit do you lend to is where lenders are starting to differentiate now and be known for. For Pallas Capital, we concentrate solely in commercial real estate debt, and that's been our focus now since we started in 2016. So a lot of different lenders are doing different types of private credit lending across different asset classes or different verticals within that space. But for us, it's purely private credit in commercial real estate debt.
Indeed, there's an argument to be made that it's no longer an alternative. It's an asset class of its own with its own sleeves. A lot of managers now operate in this space, obviously, and as one of those early incumbents, you mentioned 2016 kickoff date. What do you see as a key to thriving in the asset class?
Well, certainly from our experience, 2021, we did our first institutional funding deal where we had Credit Suisse come in for a $500 million facility. That has really changed us as a business. But by change, I mean we had to beef up. We're getting institutional banking money from us, from that sort of lender. So what did that mean? That meant a much bigger credit team. We now operate with a 35-man credit team. So it was about a year to do DD to get that money, and it changed how we now operate in the marketplace with that loan size being able to be drawn down from the institutional funder. It's changed it now. If without that, where would we be? We would be with high net worth money. We would be less in size in terms of our total FUM now is $2 billion. So it's supercharged the growth. And now certain lenders in this space are definitely attracting institutional capital. We're seeing that come through just in the last month. There's been lots of deals being done with offshore money coming into various lenders in the space. So that's a trend that's continuing, and we see that. We're certainly in that space. We're having lots of conversations with other institutional lenders. But for Pallas, it's also a balance of keeping high net worth investors and this institutional money. And institutional money gives you a lower cost of capital. So as a lender, you can be more competitive, and you're getting closer to where a bank-funded loan may be offering. We will never get to a bank-funded rate, and that's okay. I think the market fully accepts there's always going to be a margin over the banks. But that's where we've moved to, from high net worth money, which is more expensive, into an institutional money, and then obviously the banks are down at the lower quadrant.
You touched on due diligence there. What does that DD look like, whether it's institutional or private wealth capital?
Yeah, look, it's deep. It's so with so
broad
much time. Yeah, it really is a deep dive. We have 40 individuals in our loan management credit team, managing over 300 loans. So we probably operate more from a bottom-up approach. We look at where is that development, where's it located. Then we start to look at the sponsor, who's the sponsor behind that asset. But ultimately, it's we are lending against the value of the land. So if something happens against that land, that property, it's nice to have a nice sponsor with a big balance sheet behind them. But as the lender, we own first mortgage on the land. So for us, it's really about where the land is, what's the usage in that property, and maybe what the borrower is trying to do to that property.
Okay. And so if you put on your forward projection lens there, what do you see as the next evolution or the next step in this sector?
We're seeing a democratization really on this credit space. We're seeing investors have a great choice into what sector, what subsector they want to play and invest. So you can pick and choose your investment manager to say, I like that exposure, commercial real estate debt. You might, on the other hand, like exposure into private credit, company credit. other non-bank lenders out there would specialise in that space. So I see that trend definitely continuing. Investors will benefit from that. They'll have the choice, and that's coming through the advisor network world. The advisors are becoming more nuanced around which investment managers offer which services, and so that will deepen. And I think ultimately the consumer, the investor, will benefit from this greater choice.
Yeah, so more sophisticated levels of diversification within private credit.
I think so, 100%.
And what do you think will be the biggest, again, you'll be looking at your crystal ball, but what do you think might be the biggest market surprise of 2024 as we move to the back half of the year?
I think I remember this question a year ago, and I said something about Bitcoin rising to all-time highs. I think it still might rise to all-time highs. I think for us, the cycle now, where I see this global cycle, is interest rates have peaked. We're starting to move into a moderating inflation cycle. That for us puts out that crystal ball 18 months, 2 years into a much more favourable lending market than where we were in 2022, when there was a lot more pressures and risk associated with lending. Inflationary pressures were a lot higher. So I really do think that the next 18 months will be a time of growth for us as lenders, and also probably less external shocks coming through that would, in the past have made investors more fearful about coming into this investment space.
Craig Bannister, thanks for joining us.
Thanks very much. Cheers.